Are you an established small business owner or aspiring entrepreneur? Would you like professional advice to help your business grow and succeed? Well, look no further. The Virgin Islands Small Business Development Center is the territory's #1 resource to move your business forward. Enjoy no-cost advising, low-cost training, and technical assistance from experts in both the public and private sectors. The VISBDC is nationally accredited and sustained by the University of the Virgin Islands and the U.S. Small Business Administration. Visit us at our locations on St. Thomas, St. John, or St. Croix, and follow us on social media at VISBDC. For easy access to all our training and networking events, be sure to join our newsletter and download the VISBDC app. The Virgin Islands Small Business Development Center, here to help your business start, grow, and succeed.
Hello, good morning, everyone, and welcome to the VISBDC's hosting of the 2025 Tax Basics for USVI Small Businesses webinar. Today's session will equip USVI small businesses with the tools necessary to get prepared for tax season. The VI Bureau of Internal Revenue is here to share insights on what forms to fill out and procedures to follow to file in a timely manner. Here's a friendly reminder to put your questions in the chat, and they will be addressed by the presenting team either directly in the chat or later during our question and answer segment. A copy of today's presentation will be attached to the post-survey email. We encourage you to take a few minutes after the live event to fill out the training and let us know how we are doing. So without further ado, IRB team, the floor is yours. Ms. Perpetua Cranston will begin.
Good morning, everyone. Thank you for joining us today. On behalf of Director Lee and the management and staff of IRB, we welcome you. We would also like to thank the Small Business Development Center for inviting us to present today. My name is Perpetua Cranston. I am the Chief of Audit. With me today are Ms. Sharon Carr, who is the Chief of Delinquent Accounts, and Ms. Jacqueline Luke, who is the Assistant Chief of Delinquent Accounts.
So Ms. Cranston, we're just going to ask you to enter into slideshow mode so that everything appears nice and big for the audience to see.
Okay, so you're not seeing my slideshow mode?
No, not at the moment.
Okay, all right.
The PowerPoint was up, but when it goes into slideshow mode, everything appears bigger for the audience
All
to
right.
see.
Let me do my entire screen then, make life easy for everybody. Thank you. Is it better now?
Perfect. Thank you so much.
You are welcome. So as I said, my name is Perpetua Cranston. I am the Chief of Audit. And today our objectives are to tell you a little bit about the Bureau of Internal Revenue, tell you a little bit about the different types of business entities that are available for you to use, about record keeping, when and where to file your personal and business taxes, some common errands that we see in our office, the excise and gross receipts tax modules that we have, and we have a brand new module that we brought online recently, and what to do if you cannot pay your income tax obligations today. We also have a question and answer segment, and we have some resources for you. Who are we? The Virgin Islands Bureau of Internal Revenue was established in 1980 after we split from the Division of Finance. We were known as the Tax Division. Our mission is to fairly administer and enforce the internal revenue laws of the U.S. Virgin Islands with the highest degree of integrity and equality to all persons in our territory, Do remember, we are a mirror territory. We at the Bureau of Internal Revenue are devoted to serving the public by actively engaging and meeting taxpayers' needs by modernizing and simplifying our systems of tax administration. We are committed to continue to improve our efforts to inform and educate our taxpayers through various platforms in order to encourage voluntary tax compliance. Our director's office is divided into many different parts. We have our legal counsel. She's very knowledgeable. She's been with us for quite a while. We also have our human resource division, Ms. Ophelia Hector. She's also been with us for a while. We also have a disclosure office and a U.S. claims unit. As you know, we mirror a lot of the laws from the Internal Revenue Service, and so we needed a liaison office, and that's the function of those two offices. We have our computer operations, who's responsible for a lot of the information that you see with us, our tax system, and maintaining our system on a daily basis. We have our processing division. All tax returns that come in, that's where they hit first. They hit our cashiers, we stamp them in, we take the monies that come along with them, or we separate the returns into balance dues and refunds. We have our data capturing group. Those are the individuals that put the tax returns onto the computer for our public and make us able to get refunds in a timely manner. We also have the audit enforcement group. What our group does is income taxes are selected for audit, randomly selected, and we contact the individual and we determine what information we need from that individual in order to verify the information on the tax return. If we have some errors, we correct those errors, we educate our taxpayers so that going forward, we no longer have those issues. Delinquent accounts, also known as DAR, their function is to collect delinquent taxes and returns that are due to the USVI government. So let's start. How many of you are here with us that have new businesses? If you can put it in the chat, or do you have a established business? Okay, established. Okay, all right. So maybe everybody else is new. All right, so if you have a new business, the first place or the first thing you should be thinking about is the structure of your business. Do I want to be a sole proprietor? Do I want to be a partnership, a corporation, an S corporation, or a single member LLC? And a little bit later, we'll get into what each one of those mean. So once you have your business name in mind, you have to make sure that nobody else has that business name. So at that point in time, you will go to the Lieutenant Governor's office and register your name. You would also go to the Department of Licensing and Consumer Affairs to make sure that your business is registered there. And from there, you may need some permits. You may need a fire permit, or you may need a health permit, or any other permit that you may need. So that's the starting point. So what is a sole proprietor or a single member LLC? It's defined as an unincorporated business with one owner. And we have some examples here: a freelance writer, an accountant, somebody that bakes, a fisherman, a farmer. If you have a little deli or grocery store, an itinerant person that has one of those little carts that they do business in. All of those individuals are examples of sole proprietors. And sole proprietors normally have certain filing requirements. Most of us here today probably filed a 1040, so we're familiar with it. As a sole proprietor, you will also be responsible for your Social Security and Medicare taxes. So you will have to file a 1040 SS with the US government. One of the common errors that we see is that our individuals, we use a tax system such as TurboTax, and in the US, the self-employment tax is affixed to the return. However, here, because we do not collect the self-employment monies, we have to disallow that information and complete the tax return without it. You only get credit for the 1/2 of the self-employment tax. If you have employees, you will be filing what is known as a 501 VI, which is our deposits. Not everybody has that requirement, but if you do, just be aware of it. The 941 VI, that is the form that is turned in to us every quarter. So every month you turn in your deposits if you're a monthly depositor, and every quarter you fill out the 941 VI, which your deposits are affixed to. If you have a Social Security obligation for your employees, you're going to be filling out the form 941. In the past, it used to be a 941 SS. However, the IRS made some changes, and so now we fill out the 941. Recently, January 31st, most individual or before that receive what is known as a W-2 VI. If you're employed by someone, you can have your own business and be an employee of someone else. So you may also receive a W-2 VI. Some self-employed individuals work for other people as a contractor, and as such, you will receive a 1099 NEC, non-employee compensation. Another item that you may be responsible for is our our excise tax. If you bring in from any products into the Virgin Islands, or you manufacture any products for resale, you may be responsible for filing our excise tax form, which is Form 721 VI. And most people are familiar with our gross receipts form, 720B if you're an annual filer, or 720 VI if you're a monthly filer. On the screen, we're showing you our Schedule C. We broke it down into 4 different pieces just for you to become familiar with the form. The first line asks for the name of the proprietor, which will be your name and your social. We would like to know on line A, the principal business. What type of business are you in? And we do have codes for you to use on the back of the form, or in the booklet, the 1040 booklet. There is a list of the codes that you use depending on the type of business. If you cannot find the code for your business entity, you use 9s all the way through in order to fill in box B. Box C, the business name. Some individuals use their name as the business name. Others do have a business name. Others do have an EIN number to use, which means an employer number, or some individuals just use their Social Security number. In order to get an employer ID number, you would have to apply for one with the IRS. In box E, your business address. Please make sure to put your business physical address. A lot of people put the PO box, and that's not what goes there. Your PO box goes on your 1040. However, here we need to know where the business is located. In box F, what method of accounting are you going to use? Are you going to be a cash basis, accrual, or other? And we will get into that a little bit later. And since most of us work in our own businesses, we will definitely be materially participating because we're hands-on, we're doing what needs to be done. We also have box H through J, and you can fill it out as needed. Let's move on to income. Part 1 talks about income, gross receipts. In this box, you put the total amount of monies that you earned for the month if you're a monthly filer. On the gross receipts form I'm talking, but on your annual form, that's Schedule C, it will encompass the 12 months of the year. If you haven't been in business for 12 months as yet, let's say you started your business in October, then your income is going to be October, November, December. Those 3 months are going to go in that box. Some individuals do have returns and allowances, such as a grocery store or some other store that something came broken, a plumbing store, maybe the faucets came broken and you have to send them back. That's a return, an example of a returns and allowance item. Then you would have to calculate your cost of goods sold. And we will get into that a little bit later because there is a formula. And this is how you arrive at your gross receipts for the Schedule C. And some other businesses, you may have other income, other places that you get income from. You may have a rental or some other type of item. That information goes there. On to the second part of the Schedule C. And the reason why I'm going to focus on the Schedule C is because most of our forms, whether you're filing a partnership, a corporation, or a Schedule F for farmers, the profit and loss statement that we're seeing here is pretty much similar. In this section, we have our expenses. Some expenses are deductible for tax purposes and some are not. So be aware of which ones are on the tax return. For example, advertising. You're a new business or an established business, you need to advertise in the newspaper or online or even print flyers. That expense goes there. If you have a vehicle that you use for business, you can deduct your gasoline, your oil changes, etc. Those expenses will go on the line 9 that you see in front of you. One of the lines that we have some issues with is contract labor. With the contract labor, an individual has a business, they may hire an person to work for them. Let's say you're in construction and you hired someone to do the plumbing work. Well, you have 2 ways you can do it. You can contract out the work or you can hire the person as an employee. If you contract out the work, do remember that this is the line for that item and that individual needs to receive a 1099 NEC from you by January 31st of the following year. We have depreciation. That's another big item. Any item that you purchase for business purposes may be depreciated. Some items are depreciated quicker than others, and IRS provides a whole lot of information and booklets about that topic. You have insurance, and I am skipping some lines because I'm just going with the more popular ones. Line 15, an individual may have insurance for the business. Let's say it's a taxi driver and his taxi has to be insured. So the insurance for his taxi can go there. Some individuals may have taken a loan to start the business. Line 16, you place your loan there. Legal and professional fees. If you pay someone to prepare your tax return or to offer you legal advice, line 17 is where you would put that information. Line 18, office expenses. Anything you buy for your office, your pens, your papers, your computers, all of those can go under office expense. Some individuals may have a pension plan or profit sharing plan that will go on line 19. And one of the items that we see a lot is rental. If you're renting a space from someone, say in Sunny Isles, for example, or in Tutu Park Mall, if you're on St. Thomas, the rent that you're paying to that individual would go there. What we've also seen is sometimes there are errors where an individual may mistakenly put a number there for their home. No, your home does not go there. Your business location rent goes there. Let's skip down to line 23, taxes and licenses. You paid the licensing and consumer affairs. You paid lieutenant governor's office. You paid the IRB. You paid excise. You paid customs. That information goes on line 23. Travel and meals. This is a very important section to look at because an individual that travels for business may be able to deduct the business travel and a portion of the meals, but everything has to be documented and there has to be a business purpose. Utilities, it can include WAPA, it can include Innovative or VIA rather, it can include your internet service, Bravo, etc. on line 25. If you have employees that you paid wages to, that information goes on line 26. And any other miscellaneous expenses can go on line 27. The rest of the form is a calculation of all the information that we've covered so far. So you're going to have your income minus your expenses, and that is going to give you your net. Some individuals also have a home-based business, and they may want to take a deduction for the business use of the home. Please remember that with business use of your home, you have to have a dedicated area that you use on a continuous basis for that business in your home. So if you're in your living room, that would not count as a space, okay? Cost of goods sold. Remember we spoke about that earlier. Almost all business have inventory. Your inventory needs to be calculated, and that's what will go on line 35. So we look at your inventory at the beginning of the year. Any purchases that you've made during the course of the year goes on line 36. And any cost of labor associated with those purchases can go on line 37. I haven't seen many individuals with materials and other costs, but they do exist. So if you have an accountant or a bookkeeper or even a CPA, that individual is going to be the one that determines whether you're going to put information there or not. And everything that we've just gone through for cost of goods sold is going to roll up into one number on line 42 that we are going to subtract from your gross receipts. What's showing on the screen right now is giving you an opportunity in part 5 for other expenses. There are some expenses such as if you're a doctor and you get different publications, or if you purchase little books for your daycare, you may put those expenses here and the cost of each item. All right, so partnership. We just went over the sole proprietorship and the Schedule C that the sole proprietor will use. Another form of business entity that you may be interested in is a partnership. And it is a formal arrangement by 2 or more partners to manage and operate a business and share its profits and losses. There are 4 different types of partnerships. You have the limited partners. Those are the individuals that they have limited liabilities. You have general partners. They are responsible for any debts and that the business may have. You have the limited liability and the LLC individuals, which offer the partners a little bit more protection from creditors. Every partnership has to issue a K-1 to its partner. So if you're in a partnership, make sure that you get your K-1 so that you can file it with your tax return by April 15th, or if you have an extension by October. A partner cannot be an employee of the business. We have partners that work in the business, but you cannot be an employee of the business. We have common tax filing requirements for the partner will be the 1040 and the 1040 SS, which is for Social Security, which goes to the IRS. The common filing requirements for a partnership is the main form is a 1065, and it contains a form similar to the Schedule C on the first page, and then it has its other pages. You may have employees, which you may need to give them a W-2. You may have done some subcontracted out some work. You may have to give that person a 1099 NEC. And for your employees, you may have deposits requirements, and you may have Social Security requirements. You may also be responsible for excise and gross receipts taxes. Notice the forms are pretty similar to the 1040 forms or the Schedule C forms, that the sole proprietor forms that we looked at earlier. Corporation. It's a legal entity that is separate and distinct from its owner. A corporation is taxed 2 times. It's taxed at the corporate level and it's taxed at the shareholder level. A corporation is created when it is incorporated by a group of shareholders. So a group of people get together and say, we're going to form a corporation. You do that formally by having some bylaws and some articles of incorporation. Of course, you have to register with our Lieutenant Governor's office, pay the applicable fees, go to Licensing and Consumer Affairs, do the same thing there. And if you have a business location, then you're responsible for paying, whether be it your fire or your health or whatever other permits you may need to have. There are common business filing requirements for the corporation. A corporation files an 1120 tax form. The first page of the 1120 tax form is similar to the profit and loss of a business. You may have employees where you will be responsible for your 501s, your 941s, your W-2s. You may have subcontractors where you may be responsible for your 1099 NECs. And on normal business wear and tear, you may have to be responsible for your gross receipts and your excise tax filings. Now we move on to the S corporation. S corporations and partnerships are known as flow-through entities, which means that they are not taxed at the business level, they are taxed at the individual level. An S corporation is also a legal entity and it is separate and distinct from its owner. It is created when it is incorporated by a group of shareholders, pretty similar to the regular corporation. However, an S corporation gives its shareholders a K-1. That K-1 is used to prepare your 1040. On an S corporation, a shareholder can be an employee. The common filing forms for the shareholder are the 1040. And the business forms for the corporation are the 1120S and the other applicable forms similar to the corporation. Record keeping is very important for our business. It's a starting point. Once we have our records properly, our accountant has an easier job. So we have two methods of accounting, or two popular methods of accounting that are used. One is cash and one is accrual. Record record your transactions daily, meaning that if you have a business and you're working it every day, record your information every day. If you're a beautician and you're working on your client's hair, get a calendar or an appointment book. Record what you did for that client, record how much monies you made with that client. A lot of people use QuickBooks to maintain this information, and some people still do it manually, and some people use Excel. It's all up to you how you want to keep your records. My suggestion would be to implement a document system. I like the folder system where I have 12 folders and I label them January to December, and all my information for January goes into January. My information for February goes into February, etc. Reconcile your bank statements on a regular basis. This tells you how healthy your business is. For tax purposes, you have to have a profit motive. So therefore, you want to know that you are successfully maintaining your business and your business is making money. And lastly, I'd like to advise that you back up and secure your records. We are in a hurricane area. From time to time, we get water intrusion and it may damage our computer. Well, let's have a backup. You back up real regularly. Some people back up nightly, some people back up weekly. It's totally up to you and your business, the method that you use to back up your records, whether be it on a jump drive, in the cloud, on an external drive, something like that. All right, let's get back to the cash method versus the accrual method of accounting. So the cash method is reporting your monies when you earn it. Accrual accounting is reporting your monies as soon as the transaction happens. So let's look at an example. A farmer who uses the accrual method of accounting, this is that example. Farmer John sells tomatoes in December 2023, but does not get paid until January 2024. When does Farmer John recognize the amount of the sale if he's on the accrual basis of accounting? So accrual, as soon as the transaction happens, Farmer John is reporting that monies. Example 2. When a farmer uses the cash accounting method, assume the same facts as above. When does Farmer John report his sales? Any ideas? You can put it in the chat. Okay, so if you're on the cash basis of accounting, Farmer John will report it in January.
Someone responded when service happens.
Okay, when the service happens. Okay, that'll work too. So the service really happened in January, in December when he got the stuff, right? In January when he got it.
Someone else responded when he actually gets paid.
Is this for the cash basis or for the cash basis when he actually gets paid, that's when he reports it. That is true. All right, so we have the definition of income. We've been talking a lot about our Schedule Cs, our different other forms of tax filing documents. So now let's define income a little bit more. Income is the money a business owner receives for services or labor rendered. A business owner should include in income for the tax year in which all events that are fixed to his rights to receive the income occurs, and you can determine the amount with reasonable accuracy, including an amount in income on the earliest of the following dates: when the payment is received, when the income amount is due, when the income is earned, or when the title passes to the other individual. So Farmer John, when he made the agreement in December, that's when he received the products from the individual, for example. So we have an example here of record keeping on a cash basis. So the individual has a plumbing store, and on January 3rd, 2025, his cash sales were $263. I know we don't have sales tax down here, but this was the example that I found, so bear with me. If we did have a sales tax, it would be included. And he earned $267.80. So cash on hand, cash in his register, he counts his coins, he counts his bills, he counts his checks. And if you notice, he has a total cash in his register of $300.80. And he has a petty cash slip for $17, which accounts for his total cash of $317.80. So it's important to track your petty cash as well. Less change and petty cash. So now you're backing out the monies that you had started with originally in order to get back to the monies that you made that day. So he's backing out his petty cash of $17. He's backing out his coins of $33, which totals to $50, and he's reducing his $317.80 by the $50. And so he's balancing with his top figure of $267.80. We just had an example of the daily reporting for the business. However, our daily reporting has to add up to our monthly reporting. So in this example, we are showing you how you can track your daily sales on a monthly basis. So day one, which will be day 3 there, he had net sales of $263.60, and he takes out his sales tax to come up with his daily receipts. Let's say day 8, he only made $137.50, and of that money, $2.13 needs to be reduced because it is his gross sales, and he has a total of $190.89 in daily sales because he's including his sales tax. And if you notice on his right, on my right, or on our right, he is showing you the total deposits. It's important to deposit your monies on a regular basis. I've seen where individuals hold the money and then the bank does not reflect the information that is in your books. So we have to be consistent. And at the end of January, this person has $4,942.56 sales in daily receipts. But of that money, $77.51 is his tax. And he's showing you that he deposited all his monies because it tied out together. The other part that we are going to deal with right now is expenses. Under the accrual method of accounting, a taxpayer can generally deduct or capitalize a business expense when both of the following apply. The all events test has been met, which are all events have occurred that fix the facts that the liability has been incurred, and the amount of the liability can be determined with reasonable accuracy. Also, economic performance has occurred. What is economic performance? It is when property is used or services is provided. For example, John, a grocery store owner, uses a calendar year and an accrual method of accounting. John enters a contract with ABC Farm Consulting in 2023. The contract states that John must pay ABC Farm $2,000 in December of 2023. John does not receive any service under the contract until May. John should not report any expenses under this contract until 2024, which is when he actually receives the economic performance. That's when he receives the service under the accrual method. On the cash method, when you pay it, you report it. This is an example of how you can keep your expenses. I like Excel to keep my expenses. I've seen where some people do this, of course, in QuickBooks, makes it a lot easier. But with QuickBooks, you've got to know your debits and your credits. So for example, on day 3, he paid Dale Advertising. He records the check number and the check amount. And then I like what they did here, where they told you where the check needs to go. We do not have the advertising portion, but of course that will be under advertising. In this method, at the end of the year or at the end of the month, you know where your expenses went. Say for example, day 4, he has Auto Parts Inc. It went to materials. So you know that that's for your car, and it's going to be under materials on the tax return. This method, if you do not have a computer and if you like to keep your books manually, this is an excellent method to use. Let's talk about inventory. Every business, almost every business have inventory. If you have a grocery store and you purchase canned goods, that's your inventory. A business owner who is required to keep an inventory should keep a complete record of said inventory as part of the business records. You count the amount of items you have at the end of the year, or when you and also when you receive it, to make sure that that's what you received. If it's the type of inventory that you need to have measurements for, then you need to have that. All factors that enter into your valuation. Let's say, for example, you have a gas station. You measure, from time to time, we will see the gas station is cornered off and the gentleman is putting the measuring stick into the gas in order to determine how much gas he has, in order to determine how much gas he needs to purchase. Quality and weight, if applicable. If you're purchasing an item by weight, say goods and services like cucumbers, then you want to make sure that you're getting the right amount of weight, and you want to make sure that at the end of the year you have what items you're supposed to have left over. This is an example of an inventory sheet. This individual, they had item number 1, and so they have the name of the item, they have a description of the item, they have what the item price is, which is $51, how many of that item they have, 25, and the total value of those items would be $12.75. When do you reorder? This person wants to reorder when they have 29 left. How many days will it take for the order to come in? It usually takes about 13 days. And what quantity are you going to reorder? And this person is going to reorder 50. So if you look at line 6, item 6, the value of item 6 is $11, and they have 5 on hand, which is a total cost of $55. They want to reorder at 9, and so they're going to reorder, and it's going to take about 13 days, and they're reordering 150 of the item. And this is what this individual did in order to keep their inventory. It's important for businesses that maintain an inventory to count your inventory at the different intervals. You can do it at the end of the month and at the end of the year in order to make sure that the inventory is accurate, and you can give your accountant the accurate information. So now let's talk about due dates. All tax returns are due at some point in time. And in order for us not to get interest and penalties added on, we need to turn them in timely. January 15th, our estimated tax payments are due. Whether you're an individual, a farmer, or a fisher, that's when they're due. On January 31st, our 720 annual gross receipts forms are due to the Virgin Islands Bureau of Internal Revenue. Also on January 31st, if you have employees or subcontractors, you should be issuing the W-2s and the 1099s to those individuals. And you should be turning in your quarterly returns to us, which will be your 941s. On February 28th, every W-2 has a control sheet. The control sheet for the W-2 and the 1099 needs to be in our office by February 28th. Copy goes to us and also to the Social Security Administration. And you can find more information on those items in publication 15 on the IRS website. They also have a publication 509, which has a calendar that tells you when the different forms are due so that you can stay up to date. On March 17th this year, usually March 15th, but of course, March 15th is a weekend. So the next day is business day is the 17th. The partnership and S corporations are due. If you're not able to file your partnership and S corporation forms at that time, you can submit an extension filling out the applicable boxes, and it's form 7004. April 15th, most of us are familiar with that date. We have to file our 1040s on that date. Our corporate returns, our estimated tax payments, and our quarterly returns. If we are not going to file our 1040 and our C Corps, we need a valid extension. So remember to turn in your extension on that day if you will not be able to file. And you also have to pay on that day if you believe you're going to owe, in order to avoid interest and penalties later on. January 31st, we covered that in the last book. Our gross receipts, 720 VIs. Our 720 VIs are for individuals who has gross income of $225,000 or more, and that return is due on the 30th of the following month. So if you have gross receipts for March, it is due on the 30th of April. If it is February, you go ahead and you turn it in on the last day of February. Excise tax, 721 VIs. When you're importing or exporting items, it's due on the 15th day of the following month. Everyone else, if you have a bond, if everyone else pays at the time of clearance. So I apologize for that going down there. Hotel room tax, 722 VIs. It's due on the 30th of the following month. So is the fuel tax and the timeshare tax. What is due quarterly? Our estimated tax payments are due quarterly. Who pays our estimated tax payments? Everyone is required to pay the federal government taxes as they earn or as they receive income during the year. If you're a W-2 employee, your employer, depending on the W-4 that you fill out, removes a certain amount of withholding tax, and that amount of monies is remitted to the Bureau when it's due. If you're self-employed, you've got to do a little bit of calculation to determine how much estimated tax payments you are going to turn in. With publication 15, once more, is pretty good with that. There is a chart, and you follow the chart based on your filing status and the amount of monies you earn, and it gives you a pretty good idea as to what your estimated tax payments should be on your income to the Bureau. And it's also used to pay your Social Security to the IRS. Federal law requires employers to withhold certain taxes from the employee's pay. Employers' quarterly returns, we discussed those, which are due on the April 30th, July 31st, October 31st, and January 31st. Your employer remits these documents to us along with the monies that they remove from your check as withholdings. The money deducted from an employee's gross pay is remitted to the Bureau by the employer. Employer quarterly returns Form 941s for Social Security and Medicare. Social Security rate is 12.4%. However, the employee does not pay that entire amount. It is cost shared, so half is paid by the employee, which is 6.2, and half is paid by the employer, which is 6.2. It is limited to $176,100 per year. Medicare rate. Our current Medicare rate is 2.9%. Half is paid by the employer and half is paid by the employee. And the half is 1.45%, and there is no limit on the Medicare paid. So when you get your W-2, when you look in box 2, you see withholdings. That is the amount of monies that was paid over on the 941s that was removed from your check, for example. All right, some of the common errors that we see in our line of business. A taxpayer turns in his tax form. Your Schedule C is missing and you have a business. Now you have the number on page 1 of the 1040. However, we do not have the schedule. Then we will have to write to you and inform you that we're missing a document. We tell you what we're missing and we tell you we cannot proceed to process that return without those documents. So it's very important when you receive your information back from your accountant, or if you're the one doing your tax return using TurboTax, TaxAct, or any other tax software, please make sure that you print and attach all the necessary forms. 1/2 of the self-employment tax is unpaid. Usually this is something we see in audit. Some of our taxpayers, because the tax return is programmed to allow you a deduction for the 1/2 of the self-employment, it's there. However, some individuals do not pay the self-employment tax. And so it becomes an error on our side. And if you do not pay it, we make adjustments. So just keep that in mind. So remember earlier I said the tax form is designed for the IRS. Even though we mirror the code, the Social Security tax is not paid to us. Hence, we see self-employment tax claimed on the return. That item will generate an error. Our error resolution group, which is on the processing, will send you a letter letting you know that the IRB does not collect the Social Security payments and it should go to IRS. Using your mailing address as your business address, we covered that under Schedule C. Remember to use your business address. If your business address is 123 Sunny Isles, that's what we need to see on the Schedule C, not your mailing address.
Ms. Carnes,
Another
we have a
common,
question.
okay, go ahead.
What defines a new business versus an established business?
What defines
Yes,
a new business versus
versus
an
an
established business? So
correct.
a new business, if I had to take a guess, a new business would be somebody that's brand new coming in. Say, for example, I've never been in business before. I do not have an employer ID number. I don't have a business license. I'm opening a grass cutting business, and I already bought my lawnmower, my weed whackers, and now I want to get established. So I'm going to go to, well, first I have to have a business name. So I get my business name, make sure nobody else has it because I'm going to go to the Lieutenant Governor's office, make sure I'm clear to use that business name. Then I'm going to register it there and go to the Licensing and Consumer Affairs office. I'm going to pay whatever applicable fees for whatever category of business I'm in. And then I'm going to start my business. It's important when you start your business that you have your paperwork in order up front, and also that you start your record keeping at that point in time. If you're an established business, that means you've been in business for a little while. What about 3 months, 4 months, 5 years? You've been in business, so you know what you're doing. You're established. Does that answer the question?
Yes, they responded, thank you.
Okay,
Another question.
go
Is
ahead.
there a difference between estimated taxes versus self-employment taxes?
Yes. Estimated taxes are, let's say, for example, I'm self-employed and I worked for about 3 people in the community. I'm a painter and I painted 3 homes. I may have earned about $5,000 painting those 3 homes during that quarter. On that money, that $5,000 that I earned, I may be responsible for paying estimated taxes. So I am going to pay my quarterly estimated taxes on that money to the IRB. Now, the other question was, I'm sorry, there's the tsunami warning thing in the background. So that's self-employment. Now let's go to self-employment because we just did estimated taxes. Self-employment taxes now. What am I saying? What was your question again, Sharika? It was estimated taxes versus self-employment taxes, right?
Right. Is there a difference between estimated taxes versus self-employment taxes?
Right. So the self-employment tax goes to the Social Security Administration. That covers your Medicare and your social. And the self-employment tax that comes to us, the estimated taxes that come to us covers your withholdings. So one is for withholdings and one is for your Social Security and Medicare. You can also make estimated tax payments to the IRS to cover your Social Security and Medicare. Okay. Did I answer the question?
I believe so. They'll let us know in the chat.
Okay. All right. So just remember, you can make estimated tax payments to both places, to IRB and to IRS. When you make estimated tax payments to the IRB, you're paying your quarterly withholding amount that you think you're going to owe taxes on to us. When you pay to IRS, you're saying my Social Security and my Medicare, this is for that. So it's two different payments.
She
Okay,
responded.
so
Got it. Thank you for that.
okay, so like I said in the beginning, one of the items that we see is someone opens a business, they have someone that's working for them. So you're a restaurant, you have a cook. You tell the cook what time to report to work. You tell the cook what to prepare for the day. You tell the cook what time they can leave, what time they can take lunch. That cook is your employee. However, we have some individuals that we've seen that treat that employee as a subcontractor by giving them a 1099. That's not what you're supposed to do. That's an employee. You're responsible for the employment tax for that individual, and you're supposed to treat them as an employee. If you have any questions at all, then you check with your accountant. Always refer to your accountant or defer to your accountant any questions that you are not sure about as far as it relates to your business. Fair enough? Excise tax. This is one of the taxes that we collect here at the Bureau. And if you're in business, more than likely, you've met one of our ladies or gents at the ports, or you brought some item in through VI Cargo or Paradise Freight, not sure what the vendors are in St. Thomas, and they tell you, yeah, you owe excise tax for it. So all persons, firms, or corporations doing business in the VI, except for those that are specifically exempt, must pay excise tax on all goods, merchandise, or commodities manufactured in or brought into the Virgin Islands for sale or disposition in the course of business or trade, for processing or manufacturing, or any other business purpose. Right now, our excise tax, it goes online, and that is the website. If you're an established business, you probably are familiar with this website. You go on the site and you put in your information, you make your payment, you present your paperwork to the shipper and you get your merchandise. Mr. Glenn Hodge is the supervisor of the excise tax section. He's not with us today, but he can be reached at 715-1040. And our numbers are real easy. Think of the 1040 form, and it's 715-1040. And he's located on the island of St. Thomas. And we have three offices, St. Thomas, St. John, St. Croix. Gross receipts. We brought gross receipts online recently, within the past 3 years. And everyone that has a business, whether you're an itinerant, a grass cutter, a painter, a grocery store, whatever entity you are, once you're doing business in the Virgin Islands, you're responsible to file and pay, if applicable, your gross receipts. In general, the Virgin Islands gross receipts tax is a tax on total receipts from the conduct of business within the Virgin Islands without reduction for cost of goods sold or services or any other expenses. So we want that gross receipts off the top. If you made $500 for the month, that is your gross receipts. If you made $5,000 for the month, that is your gross receipts. A taxpayer's tax year for gross receipts tax purposes should generally follow the taxpayer's fiscal year for income tax purposes. Some individuals are on a calendar year, January to December. Some individuals are on a different type of year, and so it has to follow whatever applicable year you have. Businesses with annual income of $225,000 or less, you can file yearly, and you would turn that into us in January, the end of January, the following year. Businesses with annual gross receipts of $225,000 or more, you file monthly, 720 VI monthly. If you need more information or to pay and file your gross receipts, we do have the website there. We are now online with this information. It's https://gross receipts at irb.vi.gov. We usually have a lot of farmers and fishers that ask us questions about paying gross receipts and excise. Our farmers and fishers are exempt from paying gross receipts and excise. So there's a 90% exemption. It exempts the person or entity engaged in farming and fishing from paying the excise, franchise, and gross receipts tax. These persons or entities are still required to file these forms, and that's very important. You still have to file with us, even if you write exempt up at the top, because we still have to keep track of the information. It's also important that farmers, you need to be registered with Department of Agriculture, fishers, wildlife, DPNR. You know, you've got to have those established connections in order to get these exemptions. The exemption form is a form 242VI. That form is online on our website, and it's also, copies are also available in our office for pickup. So I am going to be turning the presentation over to Delinquent Accounts and Returns branch. Do you have any questions before I leave? Of course, I'll be here. Okay, and since I haven't heard anything from Sharika, Ms. Carr, Ms. Luke, I'm gonna turn the screen over to you.
Ms. Cranston, before you go, we have one question. Do you provide payment plans on past due
Payment.
taxes?
Good morning, everyone. I'm Sharon Carr, the Chief of Delinquent Accounts and Returns.
Just a second, Ms. Carr. We had a question for Ms. Cranston, so.
Okay.
Yeah,
Well,
someone in the
Miss
audience was asking, do you provide payment plans on past due taxes?
So Miss Carr is going to cover that, and that's a very good segue for her.
Awesome. Okay, so we'll sit tight. Go ahead, Ms. Carr.
Good morning. Yes, we do. You have an option whether you want to pay by installment agreements or payroll deduction, or even an OIC, which is an offering compromise. Question answered?
Yes, she responded great. Thank you for that.
Okay. Okay. How to stay in compliance?
I'm sorry, she actually needs you to repeat, Ms. Carr.
Oh, okay.
Yes.
Yes, you can pay by installment agreements, or if you are working with someone, you can do a payroll deduction. So you can come in and set up an installment agreement as a small business, and revenue officer will be happy to take care of you.
Okay, thank you. I see another question in the chat. If considered a monthly depositor, what form is used when paying?
The 720 VI. You're talking about the gross receipts? Is this for gross receipts?
I'll let them answer. Yes, that's pertaining to gross receipts.
Yeah, it's the 720 VI.
And we just have a rule in terms of getting questions. So here's another one, Ms. Carr. If a business's gross income is inconsistent, for example, 1 year it's more than 225,000, and the next year it's less than 225,000. What is the better option to pay with 720 VI or 720B?
Most times you're taking a gamble with the B. So I would suggest you do the VI, and at the end of the year and you did not reach the 225, you can always do an amended return, which is a 720C, as in compliance.
Okay, thank you for that. The question was answered.
Okay. Okay. So how to stay in compliance? You should be up to date with filing and paying, or have an arrangement to pay. That is compliance. That is, and most small business people think that they only have to file a gross receipt. You also have to file your 1040s. So with your 1040 and a gross receipt, and if you have employees, everything must be up to date with your filing and paying. Okay? Tax clearance, they have changed it a bit, where you go to licensing and consumer affairs, and they, as long as you pay and apply, they will give you a license. But on the back end, we're going to do our research, and they have the opportunity to pull the license from you, revoke your license if you're not in compliance. Any questions on that?
I don't see any as yet.
Okay. Next slide, Cranston. So again, failure to stay in compliance, your license can be revoked. So it's always good to stay in touch with IRB. What happens if you owe? Again, you can pay in full, you can do a payroll deduction, which you come in, sit to the officer, give us some information about where you work and all that, and we will give you your copy and send your employer's copy to them for them to start taking out money from your payroll. or you can come in and do installment agreement. An offering compromise is also another option, and that is if that is if you are in if you're in compliance to and for an offering compromise. So you have options to pay. So any other questions on that?
We had a question, someone needs clarification, and I did not get the answer regarding what form was to be used when filing your monthly deposits for 941.
Okay, for 941s, if your payroll is, sorry, if your amount is 2,500 or less per quarter, you file a 941. If it's more than 25 per quarter, you file a 501, the voucher payment, 501 VI, by the 15th day of the following month.
We have someone asking you to repeat what offer and compromise mean.
Okay, the offering compromise. You can submit an offering compromise with all your attachments that it asks for. It has to be approved before it has to be reviewed before it can be approved. So that's a more technical way of collecting the offering compromise, is that one. So you can submit, it has to be reviewed, and then it's approved or denied. Is there another question?
Yes, we have someone stating, if I am a full-time employee separate from my business, do I have to pay self-employed taxes?
Yes, you do, because you're going to pay Social Security on your bid from your business. Because remember, your employer is going to take out Social Security and withhold it from you. So your additional monies from your business, you have to pay self-employment on that part.
Thank you. That question has been answered.
Okay.
Okay. Miss Industrious, can you unmute my other side?
Yes, I've been sending that. I can only ask. Are you seeing that on your screen?
Not seeing it.
Okay, so I've been asking to unmute. You may have to minimize your screens to see where it's going.
Okay, can you hear me now?
Loud and clear.
Okay, thank you. I was trying to get Ms. Carr's attention. I was asking her if I'm a taxpayer and I owe $500 in April and I'm unable to pay, can I make installment agreements without having a formal payroll deduction or installment agreement?
Yes, you repeat the question again, please.
If I owe $500 on April 15th, when I turn my taxes in and I'm unable to pay at that time, can I come in and pay on my own without having a formal installment agreement?
Yes, you can, but bear in mind, interest and penalties will be added to that 500.
Okay. If I
Failure
have
to
a,
pay, failure to
Mhm.
pay and interest
Okay.
will be added to that 500.
So if I have a tax bill, will I receive any kind of communication from the office?
You will receive a communication from the office when the bill is assessed.
Okay. Something I wanted to mention, a lot of individuals, even we started government pretty young. When we retire, we're gonna still be pretty young. And so we go on to do a different type of business. We're getting a 1099-R from the GRS or wherever we retired from. And so we think that we do not need to file and pay taxes as a business owner. Please be aware that we are responsible for filing and paying on our income, both from GRS and from being self-employed. We even have some individuals for Social Security or on Social Security income that are self-employed that still have an obligation to file and pay on their income. So Sharika, do we have any more questions? Sharika? Okay, hearing none. All right, so how to contact us at the Virgin Islands Bureau of Internal Revenue. As I stated earlier, my name is Perpetua Cranston and I am the Chief of Audit. And Ms. Sharon Carr, she gave you the presentation on delinquent accounts. We're both located in the St. Croix office and our number is 773-1040. Our phone system has recently changed, so you're going to put in the 3 letters of our name and that should send a call to us or give you an option to select one of us and get the information, the call forwarded to us. Mr. Clifford Charleswell, who is my assistant chief in St. Thomas, he couldn't be with us today. Ms. Jackie Luke, who is the delinquent accounts assistant chief in St. Thomas, and Mr. Glenn Hodge, who is the excise tax supervisor, all located on the island of St. Thomas, can be reached at 715-1040. And you do the same thing, you put in their name and you will be directed to them.
Hi, this is John. I'm the state director for the SBDC. I apologize, Sharika had to just run out for a second. She will be right back. But I
Okay.
did not see any more questions for you. By the way, I was listening, great presentation, and thank you, thank you.
Thank you.
Okay, and she is back, so I will just put her on. Thanks for letting me just jump in. I love doing that. So,
No problem. We like the interaction because it makes it more interesting.
I didn't see
All
it.
right, so right now you can see our resources page. Our website, the Bureau of Internal Revenue's website, is https, it should be a colon there, bir.gov.vi. For excise tax, it is etax@irb.gov.vi. Our gross receipts is https:// grossreceipts.birvi.gov. And our newest addition to the group is BIR Quick File. And that is OIT_register@irb.gov.vi. If you need more information about the VI Quick File, please contact Mr. Tavis DeWitt, our computer operations chief, or any member of his staff, and they will be happy to assist you. If you need any information, I should say, any of the resources that we have here that are publications published by the IRS, you can sign on to irs.gov. So it's www.irs.gov, not the VI. So I will be removing that before I forward the slides. And you search for the publication that is applicable. Most individuals that are in business, I would suggest that you look at publication 15, which is the employer's tax guide. And I also have information about being self-employed in there. It have your due dates in there. So that would be a wonderful resource to have. They have publication 509, which is the calendar. I do not have it listed there, but just jot it down. If you're a farmer or in the agricultural world, publication 225 is pretty good for you. One individual had asked us before, what's the difference between an established business and a new business? Whether you're established or new, publication 334, Tax Guide for Small Business. It's a good resource. It tells you about how to keep your records. It tells you about what's deductible and what's not deductible. It introduces you to the tax world. Some of us, we hand our paperwork over to our accountant every December, January, probably January. And these are some of the informations that might be able to help us, that we can help our accountant to put our information together a little bit more easily. We also have publication 583, Starting a Business and Keeping Your Records. The examples that I showed you with the cash receipts, the expense spreadsheet for the month, the gross receipts for the month, all of that information is in that publication. If you're going to attempt to do your own 1040 on Schedule C, publication 1040 is going to be your guide because it's an instructional guide to the 1040. On our website, our IRB website, we have a copy of the Virgin Islands Bureau of Internal Revenue Tax Structure booklet. It tells you about our excise, gross receipts, and other filing information. Additionally, Code Section, Virgin Islands Code Title 7, Section 197 talks about Department of Agriculture and the exemption that we covered today. And Virgin Islands Code Title 33, subsection 42 talks about the excise tax. And of course, we cannot forget the Internal Revenue Code, which governs the Bureau of Internal Revenue and our tax code.
Okay, thank you for that, Ms. Cranston. We have a few things to address. Someone asked if the recording would be sent to participants as a point of reference. After this live event, this webinar will be converted into an on-demand format, so you will just go ahead and sign up and you'll have access to this presentation. Now, considering receiving the post-survey email, a copy of this presentation will be attached to that. So persons in session, and if you have a name that doesn't reflect one of your email address, I have a few iPhones in here, please send me a message directly so that I can make sure that your name has been added to the attendance list and you receive those emails. We have someone who wasn't able to get the response in terms of asking about the form for the monthly depositor for the 941 VI. The volume was going in and out. So if we can get that question answered one more time, and I have another question coming after that.
Repeat the question for the 941 VI, please. They wanted to know.
I'm scrolling up to get it. Just a sec. They wanted to know what form was to be used when filing your monthly deposits for 941.
Okay, so monthly deposits for 941 will be the 501 VI. So that was covered by Ms. Carr. It's a deposit slip. You bring it into us. Now, deposits can be made at different points in time depending on your look back period. That's where publication 15 comes in. It tells you how to do the look back period, and it also guides you as to when you need to turn in the 501 VIs. What Ms. Carr was saying is that if your obligation is under $2,500 for the quarter, you can just wait and file your quarterly 941 VI return. However, if your deposits are going to be in excess of that amount of money, then you've got to file them when they're due in order to be on time. Once again, if you could pick up a copy of the 941 VI or the 501 deposit, the instructions are on the back side of those forms.
Okay, and I have one more question. If you're a farmer and not farming on the address your farm is registered on, will the location you're farming on have to be noted as your farm?
If you're a farmer, so if I'm at IRB's office, but my farm is in Sunny Isles, should I use Sunny Isles as my farm address? It sounds like what the person is asking. I would use Sunny Isles as my farm address because that's where the farm is. So the question I have though is why is the farm registered one place and then it's somewhere else? Does that farmer have two parcels of land?
The response is infrastructure and water access.
Oh, okay, for infrastructure and water access. Okay, so then you would give us the address where the farm actually is located, because if we needed to contact you and we were doing a site visit, then we would have to know the exact location to go to.
Okay, thank you for that.
Mm-hmm. Oh, and something I may have omitted or forgot. If going back to errors on the tax form, if you have an error on your tax form and you need to make a correction, do make the correction on the 1040X. It's called an amended return. So just because you filed your return, it happens with businesses. I've seen it happen where someone sends you a 1099 NEC after you filed and you did not include that income in your Schedule C, and so you need to amend your tax return. You go ahead and you amend your tax return by way of a 1040X. Recall that 1040Xs have to have a copy of the new 1040 attached with all the schedules.
Thank you for that. We have another question. Do you have to pay taxes on Social Security income?
Sometimes you do. Yes, sometimes you do. Remember, our tax system is based on our worldwide income. So even though you may be receiving Social Security income, you may also have retirement income from somewhere else. A lot of our GVI employees, we receive income from our retirement income from the GRS, and we receive Social Security, and we may have a small business. So it is possible that you may, when you put everything together, you may have to pay Social Security taxes on that income.
Okay, thank you for that. So, if you do have more questions, go ahead and continue to put those in the chat, or you can raise your hand and we'll let you ask your question directly. But in the interim, I just want to point out that the VI SBDC has so much more in store for USVI small businesses. You can visit our website at www.visbdc.org. Download the VI SBDC app on your mobile device from the appropriate app store. Like and follow us on Facebook, Instagram, Twitter, Google Business. And you can subscribe to the VI SBDC YouTube channel for new uploads of our on-demand webinars. And I also want to give a preview of trainings that are coming up. On February 21st, we have registering and maintaining your business name in the USVI electronically. On the 25th, we have disaster preparation and mitigation for your business. The time to plan is now. On March 4th, we have USVI Government Contracting Procurement Basics. On March 11th, we have SBA Federal Contracting Certifications. On March 25th, we have SBA Webinar Tuesday, the 5 C's of SBA Loan Eligibility. On April 8th, we have Surety Bonding 101. On April 22nd, we have Learn About SBA's resources to help your business start, grow, and succeed. On May 7th, we have the Credit Blueprints, Building a Strong Financial Foundation with First Bank VI. On May 9th, we have the Business Development Series featuring a step-by-step guide, learning to launch in a USVI business startup. And on May 14th, we have Aiming for Loan Approval, Building Credit the Right Way. So that's just a snapshot of what we have coming. You can go ahead to our website or within the app so you can see more and register in advance. At this time, I don't see any more questions coming into the chat. So I guess I'll take this time to say it's always a pleasure collaborating with the IRB on this initiative. And on behalf of the entire VI SBDC network, we thank you for everyone being here in attendance today, and we'll get that information out to you shortly. So thank you for your time and attendance, and do enjoy the rest of your day.
Thank you.